Welcome to Willow Oak's Value Hour. I'm Jessica Greer, Vice President of Willow Oak, where I lead the Fund Management Services team. Joining me today is Sarah Williams of Wipfli. Hi, Sarah.
Hello.
Today, we are going to talk about the tax and audit process and what that looks like for hedge funds in particular. So let's get into it, Sarah. Tax audit season is upon us. I know you're probably elbow deep in your engagement letters and all of the fun is beginning. So let's just get to the bare bones of it. What's the purpose of the annual audit and why is it so important?
That's a great question, Jessica. For a private fund that isn't managed by a registered investment advisor and isn't required to obtain an audit by a regulating entity, the purpose of an audit is really to provide confidence and transparency for their investors. In addition, most managers make it a requirement in their offering documents to provide their investors with an audit, often within 120 days after year end. So that's kind of the reason. One side benefit to both managers and investors alike from obtaining an audit is the requirement for an auditor to point out any deficiencies they note in a fund's internal controls. This gives managers the opportunity to see where their policies and procedures might have weak points and tighten up their controls to address this.
Yeah, and so in my experience, as we've been through the process with your audit team, and we've noted the focus both on the operations as well as the financials. And there's probably, not a totally clear breakdown, how much of the audit is for operations, how much is for financials, but what's your general take on that, given the emphasis on the operations when it comes down to it?
Yeah, I'm trying to think how we could break that down. I don't know that it's a percentage. Really, our focus on the controls is just how they impact the financials. So a lot of the audit is looking into the procedures and the controls that are in place, but all in relation to how that would affect the completeness of the financial statements. And
Sure.
yeah.
Makes sense. So in your experience with both small and large hedge funds, what do you think is the most important consideration that a portfolio manager might want to be aware of?
I would say one of the key aspects of a fund launch is in the selection of service providers. For instance, in regards to compliance, it's crucial to select an attorney with fund experience that can assist a fund in developing policies that coincide with the fund's investment goals. So one example of this would be in regards to a fund's withdrawal policy and considering whether there should be a lockup period or certain balance or percent restrictions. In determining the withdrawal policy that would make most sense for a particular fund, one would really need to consider how liquid the securities of that fund are. So just, saying that's one example where the type of attorney you select or a service provider could have a big influence.
Sure. Like maybe the manager isn't thinking, multiple steps down the road. When you're launching a fund, you're not thinking about investors redeeming.
Right.
You're thinking about bringing investors on, but that
Exactly.
redemption, whatever those terms are, can be so they have an impact on the portfolio itself, especially in instances where it's less liquid. Got it.
Mm-hmm.
No, that makes a lot of sense. In your opinion, ideally, at what point should a fund engage specifically a tax and audit partner, where the process, quote unquote, or starts at the end of the year, but that's, I assume, not when engagement should start, right?
Yeah, we've had a lot of launching funds start the audit process or come to us before they are really formed. And I really think this is ideal when a fund reaches out to us at that point before it has launched. I mean, obviously it's fine afterwards as well. It works out, but it can be beneficial about the same time that they're drawing up the fund documents, they often come to us. And the reason I say it's good to get us involved right away is Our team here at Wipfli has worked in the fund space for several years. And throughout this time, we've worked with a number of funds through this launching phase and have been able to help fund managers through some decisions involved in setup that might not seem important at the time, but
Mhm.
can end up having more significant tax implications or implications on the efficiency of a fund's operations.
Oh, sure, sure. I mean, it's like all things, you don't know what you don't know. And if you haven't done it before, like the instances of not knowing are pretty significant.
Exactly.
Um, so, how specifically can a fund's auditor really help inform the formation of a fund then, both in considerations like, to help the manager be eyes wide open, essentially?
Yeah, for emerging managers, I think it can be really helpful to speak with someone who has had experience working with funds. So when we take on a new client, we can review their offering documents with them and discuss the tax implications or point out aspects in their agreement that are atypical. One area I often get asked about is the performance allocation. A performance allocation can be one of the most complicated aspects of a fund. For example, how is the crystallization period impacting the return? Should there be a hurdle? And if so, what type? And then how does the high watermark affect the allocation received? These are just a few of the nuances that can be part of an allocation decision. In addition, emerging managers often don't understand the difference or that there is a difference between a performance fee and a performance allocation. And they can come to find out that this does have a significant impact for the fund. So we can help them understand what they have documented in their offering documents, and they can decide if this truly represents what they intended to create.
Sure. And helps them articulate it to their investors too, sometimes. I mean, it's
Yes.
heavy legalese in these documents. So to be able to really help people understand it, I think is key. So you brought it up. I think we in the industry use that performance fee, that performance allocation very interchangeably, probably too loosely. What is the difference between the two?
Yeah, I guess in a nutshell, and I won't go into it all right now, but very basically on the tag side, it is huge implications for whether it's a fee or an allocation. And as an allocation is generally both more beneficial to the general partner or managing member as well as the investors. So generally when managers come to us, right, they speak of the performance fee or allocation as the same thing, but how it's documented in their PPM, if it's a fee, it's treated completely different than if it's an
From a tax,
allocation.
from a
Mhm.
tax standpoint. Okay.
Yes, yeah.
Okay, interesting. So, Sarah, are there any kind of common pitfalls you've seen funds fall into that really could have been avoided if properly considered, through conversations with your team and kind of fully thinking out all of the steps?
Right. One thing that we see a little too often is a fund manager investing in a new investment for which they aren't aware of the tax or audit consequences. And, sometimes might have chosen differently had they been aware in advance. So, with that, I would say we are always happy to have a manager reach out to us and ask us whether, we are aware of any unforeseeable tax or audit consequences due to an investment they're intending to make. Although we can't offer any market advice, we can tell you the tax and audit consequences so that the manager can weigh this with the benefit of making certain investments. Some examples of common investments that have had surprising impacts include publicly traded partnerships or foreign company investments, especially once they exceed a 10% investment. So those are just few of the ones we've had.
Yeah, the whole tax discussion is probably one. better left without unknowns. Better to ask first than apologize later. So,
Yeah, and not that, it would necessarily change their mind, but it's always nice to know what you're getting into, right?
certainly, weighing everything.
Yes,
Again, taking the unknowns out of the picture.
exactly.
Well, super helpful conversation. Thank you for joining me today. Look forward to continuing the conversation and offering great insights to our audiences. Thank
Thanks,
you for
Jessica.
joining.
It was great to be here.
Thanks.
Thank
Bye.
you.